This conference will now be recorded.
Hey Rod, how are you?
Good. Can you hear me?
I can.
Oh, good. I'm ready.
How you been?
I've been busy. I'm on the road right now, so I was just trying to listen in for a few minutes.
Yeah. Where are you heading?
Denver.
Oh, okay. Okay.
My daughter's not feeling the best, and so I've been out there for quite a while lately.
Oh no, is everything going to be okay? Or?
Yeah, we're working on it.
Yeah. Well, keep me updated. We can talk privately about that if you want to share or not. But I'll be thinking of you. Hope it goes okay. Hey, Frank.
Yes. So I'm going to be listening mostly because I'm going to be in the car, unless I'm the only one.
Well, we have a bunch of registrants so far. There's only a couple people, so there might not be too much listening to do. So.
Okay.
So I'm shooting from the hip, but that's okay. This is designed to be for you folks, not me, right? So, but yeah, if you want to silence yourself or whatever, or just listen in, or
Yeah.
that's cool. Yeah, we'll catch up soon. Invite should have gone out just a little while ago for our next meeting. So
Okay.
I'm doing a little bit different this time, where you can kind of sign up on my calendar directly, and just to make it a little bit more convenient. So look for that if you feel the need to get together. But we should probably do a mid-year kind of get together anyway. So
Yes.
yeah.
Absolutely.
So
Okay.
So look for that. And yeah, safe travels. Not a good time to go to Denver right now. Hopefully it's okay, and good luck with your daughter.
Thank you.
We'll talk soon, Ron.
Okay.
There's Frank in his cabin. Give us a tour, Frank. Where's the fish? All the fish that you caught. He can't hear me. So, hey Tracy, can you hear me?
Yes, I can.
Okay. Oh, there's the fish. Rod can't see it, but so Rod, Frank, is, I think you've met. He summers in there's a cabin in Wisconsin. So he tells me he goes fishing and he could catch 60 fish in a matter of hours. It's just crazy. It's insane to me. So he usually has his buddies over for fish fries, and anyway, it's interesting. Good to see you, Frank. We'll wait a couple more minutes to see who arrives and go from there. We are recording this, so I'll probably cover a couple things anyway, post it on YouTube. And if there's not a lot of questions, we'll cut it short. It's my son's birthday today, so I'll cook his favorite meal, being lasagna. So I'll hop off early to do that.
Happy
Hey, Frank.
birthday, Garrett.
What's that? Oh, I can read your lips. Happy birthday to Garrett. Yeah, I'll let him know. Yeah, you must slow internet up there in Wisconsin. Can you hear me, Frank?
Yeah, hello.
Yeah, I can hear you. I think it's your internet isn't working particularly well.
It's the speed is pretty slow up here.
Okay. Well, we're overdue for a phone call, so I'll talk to you soon anyway, but thanks for dialing in.
Yep.
So I'm going to talk briefly since there's not a lot of people here today. That's okay. We're going to continue on doing this every month. The goal, really, just to reiterate, is to just give people another opportunity to check in, to visit. The pandemic has kind of created this, but it's also convenient for people that are local and also in the multiple states. We have clients everywhere from Alaska to Florida, currently and everywhere in between. So this is just another opportunity for people to jump in and say hello, and ask any questions if they have. So my goal today, really, I was thinking about it, was really just to check in with people and see how everybody's doing, and then talk a little bit about kind of financial success and life success in different terms. We've been hosting these for a little while, and most of them have been technical. And I thought it might be a good idea to mix a little bit of the non-technical in with the technical. For those of you who are clients or have been on previous sessions, you know me, I'm Todd Smith, owner of Level 5 Financial, and the last year or so we've been trying to work on kind of quarterly themes. So last quarter, you probably know, was more about estate planning. This particular quarter is about kind of tax planning. So we will be gathering everybody's tax returns, reviewing them and summarizing them in a report, just for kind of client education, but also to interface with respective accountants and CPAs to identify just if there's other opportunities. So that's really the technical side, but I almost forgot this in a way. Throughout my career, what I've always found is that most successful people kind of blend the technical with the non-technical. And of course, you hire us for the technical, but frequently we're helping people with the non-technical, kind of the coaching or the soft side of money. So today I was really going to kind of blend that together and just open it up for discussion on that. So Frank, I think you and I talked about doing a lot on behavioral finance, which I think is important. What's your experience been in terms of behavior and investment in life success? Do you have any input on that? You're unmuted. Now you're muted. Now you're unmuted. Yeah. I can't hear him. Can you hear him, Tracy?
No, I cannot.
Okay.
Neither can I.
Rod's still there. Okay, we can't hear you, Frank. That's okay. So, so this ties into kind of what I call, or other people call, selective ignorance, selective, kind of intentional ignorance that I try to adhere to, and it ties into kind of the pandemic, but I also think it ties into being successful, whether it's in your business, your life, or your finances. So Tracy knows this. I intentionally don't watch or listen to a lot of news. And I do that for a reason. And I think it's, Rod maybe knows this. I can't remember what type of technology you're in, but it's always based on the concept of, what is it? GIGO, good information, good in, good out type of thing, or bad in, bad out. So I'm very cautious in terms of what I listen to. But there's a whole segment of kind of literature and even the discipline in terms of behavioral economics. And I think where we all kind of go down the rabbit hole is listening to news, reading things that may not apply to us. So rather than me ramble, I was just going to play something that I thought was pretty cool by Dr. Benjamin Hardy. And it talks about controlling your attention, and you kind of control your life. And I wanted people to listen to this in terms of not only life in general, but your finances. So since we don't have a lot of people on here, I'm just going to play it. We'll record it. But let me check in with you, Rod. I know you're driving. Did you have any questions or anything that you wanted to ask or mention today, or are you just going to listen for a little while?
I was just listening.
Okay. I don't think there's going to be too much content here today, Rod, but I'm going to play this. Think of it as like you're listening to a podcast on the way to Denver. But if you don't know Dr. Benjamin Hardy, he's always talking about, he's a PhD, a younger guy, but I really like his stuff. He's always talking about how we're creating our future selves. And I don't care how old you are, but I think we're always chasing our future self, and that goes into goal setting. We're trying to improve ourselves, and I think money ties into that. You know, what is the point of money if we're not using it for some greater good for ourselves and for the community and for the world? And so he does a really good job talking about that. I think there's a good speech out there. People might want to Google at some point, whether you like him or not, but Matthew McConaughey gave a speech. I think he was accepting some award a few years ago, and he does a really good job about chasing his future self. But more to the point, Ben Hardy in this, it's only about 5 minutes or so, closer to 10. He's talking about what I was mentioning, the intentional ignorance. And I was just going to play that for people and then see if anybody had questions or any thoughts.
Are not fully refined. I'm still working these ideas out.
Let me see.
This video is going to be a doozy. I'm going to present to you some ideas that will hopefully rock your world, blow your mind.
And I guess I should share my
They
screen
are
here
not
for
fully
those.
refined. I'm still working these ideas out in my own head, so I apologize for that fact.
Let me share my screen. Let's see. I don't know why I'm having technical difficulty here. Let's see. Okay, well, we'll just go ahead and play it.
But
Can you hear that,
there are
Tracy?
three very big ideas that, if you understand, can help you elevate your life. They can
It's a
also
little
help you
low, but I can hear it.
essentially why you're not moving your life forward as much as you want. The first one is an idea in psychology called inattentional blindness. Inattentional blindness is the idea that there are infinite things going on all around you, opportunities, situations, people that you're completely unaware of because you're so focused on or distracted by whatever it is you're focused on. As one easy example, Bitcoin. Bitcoin is something that more and more people are becoming aware of, but maybe in the past they were blind to. And maybe, there's this whole mania around Bitcoin right now, and people are kicking themselves because why weren't they aware of it? Or why didn't they think more deeply about it when they heard of it the first time, maybe back in 2010 when it was $1? If they had invested in it back then, they would now be a millionaire or billionaire. So we're all blind to a lot that's around us. Actually, William James, the Harvard psychologist, he's the father of American psychology. He said that there are millions of things going on all around us that we're blind to. And the reason we're blind to them is because we're focused on what matters to us. Our experience is whatever we pay attention to. Your experience is whatever you pay attention to. William James then said, there's one difference between the genius and the ordinary person. It's not the fact that the genius has a better ability to focus. It's actually what the genius places his attention on that other people are blind to. Albert Einstein was able to put his attention on to see and to notice the laws of relativity, whereas other people are still blind to the dimensions of relativity. So the first one is blindness. And my question to you is this: what was your former self blind to that you're now not blind to? That's a really great question. What are you currently aware of, and what are you currently pursuing and seeking that your former self, could be a year ago, 2 years ago, 5 years ago, had no clue of? What are you now aware of, seeking, and pursuing, or striving for and creating in your life that your former self had no perspective of? Your former self hopefully is more blind than you are right now, but the same is true of your future self. Your future self knows more than you know. And so an obvious question is to ask yourself, what is your future self focused on, aware of? What do they value? What are they worried about? There's a great quote. It's a Chinese proverb, and it says, the best time to plant a tree was 20 years ago. The second best time is today. And so if you want to think about, what does your future self want? What should you be focusing on now? In order to actually live intentionally, you have to start thinking about where you want to go. And this brings up the second concept. And it's actually, in a lot of ways, the exact opposite concept of inattentional blindness. It's actually called strategic ignorance. So strategic ignorance is where you're strategically making yourself blind to things you don't want to be aware of. It's about creating a filter and boundaries of your attention so that you don't let certain things in. So one question is, what are a lot of things that you're currently aware of, or currently focused on, or currently distracted by, that you should be blind to? In other words, what should you be strategically ignorant of? There's so many things going on out in the world today that are irrelevant to your goals or to your situation or to your values, but chances are you may be distracted. So what are all of the things in your life, in your world, that you should become more blind to? In other words, what can you become more ignorant of on purpose? This is one of the good reasons why you would want to remove news and media. As an example, Peter Diamandis, who is a futurist, he is blind on purpose to mainstream media because it's not helpful to his goals. He sees the biases. He doesn't see value in it. Seth Godin, the famous author, he's chosen to be strategically ignorant of how people review his books on Amazon. He used to read the reviews of what people would say about his books, and he realized it was not helpful to him. And so he's chosen to be strategically ignorant. He's chosen to create rules or boundaries or a filter for his mind so that he no longer needs to see anything that's going on there because he knows it's ultimately distracting him from his purpose. Question number one is, what are you currently blind to that your future self would like you to start becoming more aware of and start thinking about so that you can start mentally preparing for those opportunities or those situations? Because right now there's things coming in and out of your orbit that you're probably not aware of because you're so focused on whatever you're focused on or distracted by whatever you're distracted by. There's once in a lifetime opportunities that present themselves to you all the time. You can call them little tests that pop up and appear, and you may fail those tests because you're either underprepared. You may fail those tests because you don't even notice them because they slipped by. Now, you don't need to be worried about what you've missed in the past. The question just becomes, what do you want to be focused on? What do you want to become prepared for? What do you want to actively prepare for right now so that your future self will thank you later? That's step number one. Step number two, what do you need to become strategically ignorant of right now? What do you need to block out so that you can actually focus? In order to create wealth, you need to create concentration. Concentration is how you create wealth. Diversification is ultimately how you protect wealth. That's what I've heard at least. So all of this brings us to the third idea, which is selective attention. Selective attention is the idea in psychology that we all do have a worldview, and that worldview is shaped by what we give our attention to. Dr. Stephen R. Covey said we see the world not as it is, but as we are, or as we've been conditioned to see it. We all have a mental filter. Dan Sullivan said your eyes can only see and your ears can only hear what your brain is looking for. Now, if you want to be a conscious, intentional human being, then what you need to do is you need to decide what you want to direct your brain towards. Your brain is always looking for something. And whatever your brain is looking for, that's what your eyes and ears see. We see selectively. We don't see the whole world as it is, but we see the world as we are, or as we've been conditioned to see it, and as we've trained our brain to see it. And so what do you do now? How do you take all of this? It's three simple strategies. Number one, realize that right now, you're currently blind to a lot of things that your future self is going to be aware of. The sooner you think about what your future self wants and what they're up to, then the sooner you can start becoming less blind and you can start becoming strategic and begin actively preparing for that. You can rid yourself of the blindness that's currently potentially stopping you from taking massive action. Another great thing to do, though, is to continuously reflect on the progression you've made from your former self. This is what Dan Sullivan, a strategic coach, would call being in the game. Taking time to look back on what your what your former self was thinking about, what they were doing, what they were pursuing, versus your current self. Your current self now knows things that you used to be blind to. Actually, Daniel Kahneman, the author of Thinking Fast and Slow, he was recently interviewed by Adam Grant. And Adam Grant basically asked him, Daniel Kahneman, do you see the world the same way you did when you wrote Thinking Fast and Slow, like 10 years ago? And Daniel Kahneman was like, no, I totally see so many things that I didn't see back then. And Adam Grant was like, well, how do you feel about that? Daniel Kahneman was like, I'm so excited about that. But then Adam Grant said, well, how does that make you feel about the book? Because the book, is limited based on what you knew in the past. And I loved what Kahneman said. He basically just said, that's all right. That was a reflection of where I was at back then. So there's no point in being mad at your former self. It's actually very powerful to recognize and appreciate the growth of what your former self saw, what they were ignorant of, what they were pursuing. Just as an example, 7-8 years ago when I was in my undergrad, I wasn't necessarily thinking about finances. I wasn't thinking about setting up my life and developing passive streams of income because I was so focused on my schoolwork. So I was blind to opportunities for building wealth because I was so focused on getting A's on my classes. And so I'm not mad at my former self, but I can also see the progression. I can see that right now, the things that I see, the things I'm aware of, the things that I'm pursuing, the goals that I have, the way I define success are all very different from my former self. But the same is also true of my future self. And if I want to live my life intentionally, I need to be first off aware that my current self is very limited. My current self is blind to many things that would potentially be advantageous to my future self. And the sooner I think about what I want my future self to be, the sooner I can start removing the blindness. In psychology, your motivation is either approach or avoid. Rather than trying to avoid what you don't want, which is a willpower way of trying to make change, what you want to do is you want to clarify what you want, and you want to spend your time and energy approaching that. The more you do something, the more you'll want it. The more you'll do something, the more you start to see more and more of it. There's a great quote from Robert Kiyosaki. He said, intelligence is the ability to make finer distinctions. Finer distinctions means your world gets clearer and clearer and more specific. Rather than trying to avoid what you don't want, you clarify what you do want, and you just feed that. You feed that beast, and you start to develop clear and clearer perspective of it. You become more of an expert on it. You start to see distinctions. Where someone sees one frame, you see 50. You get a more clear expertise and perspective, and you can then move that forward. So approach what you want rather than trying to avoid what you don't. Clarify what you want, and then really educate yourself on that thing, and you'll start to become less blind, and you can actively prepare right now for your future self. On this page, you can get access to that future self series. Have an amazing day. Please like this. Please apply these concepts. Become less inattentionally blind to what you ultimately want. Apply strategic ignorance, and then shape your selective attention towards what your future self would want you to have. And then, as Dan would say, always measure the game. Recognize and appreciate the growth that you've had. Have an amazing day. See you.
So yeah, that's a little bit different than what we normally talk about. I think, how does this tie into a financial planner and a financial planning firm? It seems a little bit out there, I guess, to some people. But our real mission is to maximize our best clients' potential, and that's with their finances and their life. And it ties in my mind, in terms of blending the psychology and the behavior with the technical acumen. So that was kind of my theme today. So I think I'll send this out to people to review. I'll send a link out. You'll see more blog posts coming in the future in terms of behavioral finance, because I think it all comes down to, we can teach people all the technical knowledge. We can execute all the technical skills that we have over, gosh, combined, everybody, me and my staff, is over 60 years. But until we master our own behavior and kind of what's between the ears, that makes it very difficult to execute the technical. So, we frequently act as coaches, and we act as people, kind of as a filter for what's good information and bad information, and help people navigate this informational age that we're in now. So it kind of relates in many different ways. So I'll send this out. Anybody have any thoughts or questions? I did have a few recent questions, but I think I'll save it until next time. When we have a little bit more participation. I won't bore you with the technical, but I think my goal for these happy hours and coffee chats will probably be kind of alternate. We'll do some that's a little bit more technical, some that's maybe a little bit more thought-provoking, more on the behavioral side. And I think by blending it, we can make people a little bit more successful in a lot of different ways. Going forward, we will have a technical webinar coming up probably next month. That will be on tax planning. So that will be a content-driven program. Frank will be helping me with that. Followed in the future quarters, it will probably be something to do with retirement planning, retirement income distribution stuff, and then risk management after that, kind of following our typical quarterly themes. I mentioned to Rod already, so maybe you heard, we are sending out invites for our mid-year reviews. So you should get an email for that. Just click on that. You can sign up directly on my calendar. We're offering them virtual now, so people don't have to find time to drive into the office and do that. So hopefully that's more convenient for people, but we'd like to hear your feedback on that. I do enjoy face-to-face, but I think it might be more efficient when there's business at hand to do things virtually, and then save the visits for some of our upcoming events, meeting for lunch, things like that. So look for that invite in the near future. Hey, Penny. And I think that's it for now. Hey, Penny, did you just log in?
Yeah, I had to figure out how to do it.
I was just wrapping up, but welcome. No, that's okay. It's pretty short. I just played a video from Dr. Benjamin Hardy. I think you would like it.
Yeah.
Are you familiar with him at all? He's a younger,
Uh-uh.
he's a younger, newly minted PhD psychologist. So he talks about a lot of chasing your future self, and specifically in this particular presentation, I'll send it to you. He was talking about selective ignorance and what we focus on and things like that. So it's pretty interesting. So,
Mm-hmm. Sounds interesting.
so yeah, we have a very light showing here. So I have time to say hi and check in with you and how are things.
Things are pretty good. Nick's gone to Houston for the weekend, so I'm here, about to go out and get in trouble.
How hot is it in Arizona? Is it in the 90s?
Yes, it's in the 90s. I can tell you in a second. It is 90. Whoa, it's 97.
Wow. Yeah, so I will call you, but I am going to be there at the end of the month for a couple days.
I hope
So
to get to see you. Yeah.
yeah, I think we'll be able to do that. I can't remember the dates. I think it's the 22nd. I think I'm coming in. I'll confirm with you. But
Are
so
you staying in Scottsdale or Phoenix, or where are you staying?
Scottsdale, the Kierland Resort. I think it's
I know
Kierland.
where Maryland is.
Yeah. So
Yep.
I guess you answered my question. I will definitely have to bring shorts. So.
Yes, bring shorts. I'd love to have you have a few minutes to see our house if you have time.
Yeah, I should. I think I'm gonna try to go a day early. The conference doesn't start actually. The kickoff is Sunday evening, and then it's Monday, Tuesday. So I hope to be there on Saturday.
Oh, okay. Yeah,
Yeah.
that'd be great.
Yeah. So rather than me ramble, did you have any top of mind questions about anything, or you were just?
Oh, I've just been watching all the weird stuff going on with business and investments and everything, and just was curious what you had to say about what was going on. Maybe nothing out of the norm for you, but just watching what's going on politically and how that's driving the market and all that good stuff.
Yeah, I think it's top of mind for a lot of people. What you want to get a little bit more specific for me? And what is there something concerning you, or are you
Well,
talking?
it's just everything's moving so fast, and I notice the market is booming along, and you just kind of wonder, well, how long is that going to keep going? That, and then what does that mean in terms of, you know, where I am in my life and stuff like that. So,
No, it's a good question. And that's something we think about all the time. And we're overdue for a review meeting too. I was just mentioning to everybody that invites are going out for review sessions coming up here this month. Yeah, I think it's a kind of a large conversation to kind of unpack.
mm-hmm.
Here's a simplified version of it. In the coming months and years, the market's either going to go up or it's going to go down. And we don't know, right?
Yeah, right.
And we position you and most people in their portfolios to prepare for the inevitable downturn, right?
Mm-hmm.
I don't think we can ever avoid, and this is a little repetitive because we've talked about this, but it's worth, you know, it's worth repeating, I guess. You know, we're not ever trying to avoid the next downturn because we don't think it works. And we know it doesn't work. The data overwhelmingly indicates that trying to avoid the next inevitable downturn is really impossible. You have really two key decisions to make, and statistically are going to be wrong. One is when to be out of the market, and when to buy back in, right?
Mm-hmm.
So if you look at the data, and there's some great tables I'll have to send out to you in terms of, you know, for example, it shows all the trading days in a 10-year period. And I forget the numbers, but it was something to the tune of 300 or 3,000 different trading days, right? And it looked at all the positive days, all the negative days, and what the rates of return comparing participating in all those versus if you missed the worst days or you missed the best days.
Mm-hmm.
And it's amazing when you look at those numbers that, let's just say hypothetically, those 3,000 trading days, if you did nothing, depending on how you were invested, you were kind of buy and hold, your rate of return was 8%. Well, then they drill into the data a little bit more, and what these charts indicate is if you missed the worst days out of those 3,000, your rates of return were marginally better. However, if you missed just the best days, and I think it only came to like 10 days out of all the 3,000, your rate of return was somewhere in the neighborhood of 2 to 3% lower than if you had done nothing. So what the point of this is, it's really hard. How do you know out of those 3,000 days of when to really be in and when to really be out, right? So what we know, I guess the point is we know that chasing or trying to time the market doesn't work. And I think you know that, right?
Yeah, I know that.
Yeah. And so number one, we acknowledge that. So then we focus on asset allocation, diversification to make sure that things are positioned in such a way that when that downturn happens, that we are cushioning it to a degree that A, we're comfortable, and B, it doesn't derail us from whatever our goals are in whatever stage of life we're in, right? So somebody in your circumstances, you know, we certainly wouldn't put everything in the stock market, right? So, and I won't share with everybody on the line what your personal circumstances are, but let's just say hypothetically you only have half of your money in the stock market and half elsewhere. That's the first step, right? So when we look at kind of the social political developments out there and markets being overvalued and somewhat schizophrenic in the way that, you know, markets keep growing despite, you know, significant events, your exposure is really only half to what we see, right?
Yeah.
So we position people in terms of where they are in life and what if they need income, what their risk tolerance is, knowing that as an investor, there's always going to be downturns. It's just a matter of how much exposure you have. And then we also know that, I've been preparing for the next downturn for quite some time, and we know it's coming. It's statistically about 1 out of 4 years, 1 out of 3, 1 out of 4 typically is a down year. What we know from history, of course, it's only history, is that there's really two things. Is one, that the typical negative markets are single-digit losses. It's not the 07, 08, it's not the 99, it's not the 86, 87, which were high double-digit negatives. So a typical negative year for the stock market, number one, is usually single digits, and number two, it's usually pretty short-lived and things rebound pretty quickly. So we always want to prepare for the worst case scenario where we do have that really traumatic kind of recessionary period. But that's the other reason why we would never have all your money in the stock market. So I'm rambling a little bit here. Am I making any sense, or what do you really want to focus on?
Sense. No, you're making sense. It's just, I think it's almost better not to watch the news these days. That's all. Just these bizarre things keep happening. So it has nothing to do with the market as much as watching kind of how those things are impacting people, things that are happening. So,
yeah, and that's exactly. Yeah, sorry. Finish. I cut you off. Yeah.
I finished.
Oh, okay. So that's what the Ben Hardy kind of connection was. So he talks about, being ignorant, intentional ignorance. And intentional ignorance, you have a psychology background, and that's what he talks about. It's filtering the news, filtering things that you allow into your consciousness, and where's your focus. So it was like a 9-minute video I played in terms of how we choose our focus and what we choose to allow into that, because it affects our ultimate intention. So this, I'm sure you've counseled your own clients on this. If your goal is to be a happy person, your goal is to reduce anxiety, then you would limit messaging from social media, from Fox News, not to pick on them, you name it, from entering into your consciousness, right?
Yeah, and I pretty much do that. So
yeah, but
well, it'll be interesting to see that video.
Yeah, I know your partner doesn't do that as much, probably, though.
Yeah. No, he does, but he does it differently.
I can't pick on Nick. He's not here, and I'm not picking on him.
Not here.
But I'll admittedly say I did a pretty bad job of trying to tie the psychology into our finances. But I opened up kind of this meeting saying, in my opinion, successful people in life and with money, they do a good job of blending the behavioral, the mental, the psychology with the technical skills. And as your advocate and your coach and your advisor, it's our job to try to do both. And frequently the proverbial hand-holding is making sure that the behavior follows the rest, right? And so it ties into the pandemic, and it ties into news, and it ties into the messaging that we're all bombarded with every day. It strays us from our actual intention around money, our finances, and our life. And that's why we're frequently for 20 years, I've had the same conversation about money and investing. It hasn't changed. The world keeps changing. But really the investment methodology, philosophy, and what works hasn't changed. And every year, you've heard me say this, every year is going to be a crisis of some sort. It may not be the extent of a pandemic. It may not be the housing crisis, but every year whether it's the media trumping it up or something else, there's just going to be a crisis. You know, it was China trade wars before. Who knows what 2021 and 2022 will bring, but it really doesn't change how we invest. The only thing that changes is how we react to it and how we behave. So to give you an example, I spent a fair amount of time last year, about this time last year, telling a couple people not to do anything radically with their investments because of the onset of the pandemic, there was a significant drop, right? So we never radically changed any of our investments during that whole period. And I'll admit it was scary for everybody. I maybe had maybe only one client out of a lot that actually moved to cash. And he's actually regretting it at this point because he left a lot on the table. So that was more of an emotional, behavioral decision. So it's just a matter of what we focus on, and have our goals changed? Has our life changed? If not, then we don't really need to deviate from what we're doing. So, you know, whatever's happening in the White House, whatever's happening with the new spending bills, potentially high taxes, a lot of things are probably going to happen or could happen. The loss of capital gains, who knows? The estate tax repeal, a lot of things are speculative right now, but look like some will go through, some won't. I think it doesn't really change what we do, and it shouldn't change what your approach is. You know what I mean?
Yep, I gotcha.
Easier said than done, right?
Yeah.
What is your intuition? What is your intuition telling you? Like, you need to do something. I mean, when you hear some of this stuff, I mean, where does your head kind of go?
It's like there's just so much. My gut says just don't do anything because there's just too much, and you just don't know what's going to happen next in terms of who's going to come up with what next.
Yeah, it is. And, you know, the only thing I can say, being a history, you know, kind of a student of the markets, been through a lot of cycles, studied market cycles well before me in the early 1900s. All I can say is that without having a crystal ball is that it always looks and feels different.
Mm-hmm.
And some instances are scarier than others, but the results or the end result is usually the same. So
I think the tendency to stay the course is because 2008, as you know, was sort of a disaster for us. So
right.
That's sort of in the back of my mind. So I don't want that to.
Right. And when we talk one-on-one, I'll go through what that looks like. But we spend a lot of time giving people the metrics, saying based on how we have you positioned,
Mm-hmm.
if 2008 were to repeat itself, this is what the impact would be.
Mm-hmm.
And we have the independent data to support that. So I can visually show you that and give you the numbers behind it. So it's important, you know. And the other thing to keep in mind is how you were invested then,
Mm-hmm.
and what your reaction was then. Right. So I know some people, for instance, even before '08, you know, I have other people in the same situation that went through the .com era, right? And so I'm talking about, you know, 99, 2000, if you remember the internet, you had all these companies with zero earnings that were trading at multiples, you know, 100 times, you know, $100 a share and more, but they never earned a cent. So you had this huge bubble, followed by, you know, that really bad period. And you had lots of people, I've talked to several over the years, that got really burnt. And the problem was twofold typically. Was one, they're overly concentrated, not invested appropriately. I tell people all the time, I never sold, or recommended a tech fund. I never did then. I never do now. I never, recommend a sector-specific fund or investment. But they're typically overly concentrated in that particular area. And then two, they probably got scared and they sold out at the bottom or near the bottom, and then they never got back in. So that replicated itself in '08. If people were not invested appropriately prior to that event, and then maybe did not make the best decisions or didn't have the best advice through that event, yeah, it could have been a significantly bad situation. I don't recall or if you shared what exactly happened with you during that time, but that's what I've seen. And I had lots of investors that rode through '08 just fine. It hurt, but frequently the non-action is usually the best action. And I'm waiting for, well, this time is different, right? Which would be the next pullback, which could be tomorrow or it could be in the year or who knows. But history kind of prevails in the sense that all these cycles, had you done nothing, is probably better than trying to do something. So I feel like you, if I remember correctly, you may have sold at some point, maybe on the way down.
What the deal was is we had a business, if you'll remember, that we
Right.
had to keep running at the same time that everything was falling. So, which was affecting the business. So you put it all together and it sort of was a perfect storm.
Yeah, right. But if you focus just on the investments, you remember what happened, exactly what you did, or?
We had to, it fell
Mhm.
considerably, and then we had to use some of that money because we had to sell some of it because of the business. So that's what I meant by the perfect storm. Yeah.
Yep. No, I remember that.
So we
Yeah.
couldn't just sit with it. That was the
Right.
problem.
Right.
Yeah.
So, yeah, I mean, that's something that you definitely want to continue to revisit. When we develop a portfolio for somebody, it's always based on age, uh, tolerance of risk, how quickly do you need the money, what type of liquidity do you need? That all factors into it. And maybe at the time there was no way to foresee that you would need extra liquidity from that for the business. So that was problematic. But where you are today, that really factored into our discussions. So, that's something that we try to revisit every year, right? Like we always check in and say, Penny, remember when we positioned this, we said, worst case scenario, this particular mixture that we have you in '08 would have been down 25%, which would be X dollars to you. How do you feel about that? Well, I don't feel very good about it, but I'm okay because I know I need it. Or no, I don't feel very good about it because I may need it in 5 years or a year or whatever. Or whether I need it or not, I don't feel good about it. And then so we have to refine things based on those type of conversations. And that could change per person by the year, mid-year. And that's why we continually check in with it. So yeah, I think you and I will do that. The other thing that I'm bringing up to a lot of people, and you and I talked about this, was the difference between systematic risk and unsystematic risk, right? And if you remember, systematic risk is really the risk of just being invested, and unsystematic risk is really risk that you can diversify from.
Mm-hmm.
So as an investor, you're going to be subject to the economic cycles. You can't really diversify away from it. If the economy falls, so too do your investments typically. Unsystematic risk is think of it as investing all in one stock. If that company goes away, so does your money. So you can diversify from that, right? So we get in this conundrum where it's like, okay, I know I should be investing. And I know I probably shouldn't be sitting in cash that pays next to nothing, right? Um, but I'm still kind of worried about the fluctuation and the risk by being invested. So we do an awful lot about diversifying and not having too much in the stock market and so on and so forth, which I can slice and dice again for you at some point. But there's really no in between under those scenarios, in between during those scenarios. So what I've talked to you about and other people is using some kind of fixed guaranteed component to fill that in between space. And historically, it's not something that I've been a big fan of because they've been over marketed, they've been marketed inappropriately, and frankly, it's mostly salespeople looking for a high commission. But in the scope of retirement planning and creating stability yet productivity, I think that a fixed income type product like an annuity has its place because that's the in between. It's something that's guaranteed by a third party. You're offloading the risk now instead of you as the investor to that third party for the return of a guaranteed plus some participation in interest. That's going to be typically better than cash and even bonds at this point.
Yeah.
So that's how you kind of reconcile it. So then you start kind of cobbling together a few different buckets. You always have your cash reserves. You always have kind of your longer term bucket where it's going to be a little bit more growth oriented, and then that's going to be subject to fluctuation and what's going on in the White House and the economy. And then you kind of you backfill that with a medium bucket that has no risk associated with anything that's going on out there. So if one were to take money and put it in that type of contract, that's insulated from whatever happens economically. The only risk really is between you and that insurance company and their contractual obligation to you. So I think that's a way to do a couple things, really. It's one, to get some productive return without risk, but then also give people a little bit more peace of mind knowing that I have some market risk going on for longer term growth and higher yield, but I also have some really safe money. In retirement becomes more and more important to kind of have that element. You remember that?
Yep, I do.
Myself?
I do. Yeah.
Yeah.
I haven't lost it all in my head.
Well, no, I joke that I have a case of the repeats. I repeat myself a lot, and some people find that comforting.
Have to. People like me. So.
No, I have a lot of conversations with a lot of people there, as you can imagine, through the week. But I think what I was getting at is I tend to repeat myself over the years, and some people find that comforting. Some people find it boring. We don't sway easily from the advice that we give because we know it works, and we're hard to move from that. Which doesn't mean that we're inflexible. We're just cautious in terms of where we go with things. And
That's a good thing for me.
yeah, everybody's different, but so that's what I meant in my repeating myself. So, and the other point to that I'll remind you, when you compare two portfolios, typically when you're looking at, well, let me backtrack. The name of the game in retirement really is to make sure that you have a lifetime of income that you'll never outlive, right? So that you can maintain your dignity, your independence, and your lifestyle for as long as possible. So in order to do that, you need to cobble together Social Security and pensions you may have and any of your assets to do that, right? So if you're looking at just your assets, a lot of research will indicate that if you compare, one that's all market-based and one that has a little bit more of a guaranteed component to it, you get some longevity security, some kind of longevity insurance by one with that kind of guaranteed component. Now, would I put everything in a guaranteed component? No. I just think it's another kind of, entity that everyone at certain stages of their life should, kind of consider. So on the one hand, it is a comfort thing. On the other hand, there's some there's an equation behind it that also makes it work in terms of, some people were looking at a 30 plus year retirement. So that longevity insurance really adds value. So, so more and more, despite what I've seen as bad annuities out there and bad advice and high commission, expensive products, there's a few of them out there that I think make sense in this context. So,
Okay.
the other thing about an annuity, and not only from an investment standpoint, is you can annuitize it. So you can, there's some good evidence out there that says you should annuitize your fixed or your controlled basic income needs by something like that and not subject to a risk. So here in Colorado Springs, we have a lot of people that have pensions.
Mhm.
So their pensions can cover a lot of their fixed basic costs. And then they can invest the rest in something a little bit more risky, more subject to fluctuation for more discretionary spending. For those who don't have a pension, sometimes it makes sense to create your own private pension, where you say, okay, I spend, baseline, not with any real travel or, anything else. I spend $4,000 a year. Well, I'm going to annuitize that so that I know regardless of what happens in the world, I'm covered. That's insured. And then you invest anything over and above that to provide more discretionary spending and or stuff to go on to kids' rares or whatever. You know what I mean?
Mhm.
So I only bring up all this because, because it's important, and maybe investment risk, depending where somebody is in their life. I'm comfortable with it for most of our clients. That doesn't mean that they are, and it might be compelling to consider that and taking some risk off the table.
Okay.
So I guess the moral of this, Penny, is I don't speculate on what Biden's going to do or doing, and how it's going to
That's
affect
what I'm
all.
relying on is your experience here. So,
Well, it doesn't change the investments,
no,
and nothing is set in stone in terms of what's going to happen.
yeah.
So, and typically, if you look at the history of different parties over the years, the economic impact from the Democratic side has been less than you think. And I don't know, I think it depends on, I don't know what's going to happen, but, some would argue that even he is, appeasing to the people that get him elected, and he's closer, he's moving more towards center, or he will move towards center than he maybe is at the beginning, So
We'll see.
we'll see what happens, right? So from a tax, but a lot of this is going to be tax stuff, right? So one thing that we can focus on for people is not necessarily how we invest, but it's how we structure your investments in different type of accounts, and try to mitigate that impact. So, but at the end of the day, you're still an investor, and if you're an investor, you have to believe in two things. You have to believe in capitalism and believe that, that you're investing in the best companies in the world, and they'll continue to innovate and they'll continue to be profitable no matter what happens, which has been true. And then two, us as humans and as a society will and ultimately do the right thing and avoid the cliff, whatever cliff that may be, regardless of the party. One cliff being spending and the Social Security and the entitlement program issues and things like that, that we'll figure it out at some point. If you don't have faith in either of those or both of those, then nobody should invest.
I just can't figure out where all the money's coming from, but that's okay.
Coming from the money machine.
Yeah, the money machine.
Yeah.
I wish I had one like that.
Yeah, exactly. So no, I'm with you. So, all this to be said, I share the same concerns as a lot of people, but, what is the alternative from an investment standpoint? And, I think if you're invested in a myriad of different areas, which we are, hedging, if we're going to go into a high inflationary period or not, um, hedging it the best we can. Um, the only alternative is not to invest. And I don't think that's a very good solution either.
Not right now.
So it's the boring, stay the course, but reevaluate how much risk you're taking, and reevaluating what the worst case scenario mathematically might be, and the reality at the 50-50 mark that I told you, 50% in the stock market, 50% elsewhere, still in an 07, 08 scenario, which you might still see again in your lifetime, maybe once, maybe not, but we want to prepare for that. It's still, like I used, even I said it was an illustration, it's still a 25% potential downturn in a year. And so you need to decide, can I stomach that? Number one, and number two, am I tapping into it at the same time? And that's where it becomes problematic.
Yeah, that's where it was problematic.
Right. And for you, I don't know that you'll be tapping into it, but you may.
Yeah.
And you may say, well, no, just in the event that I am tapping into it, I don't want that. Even though the worst case scenario may never happen, I would rather not take that chance. So let's dial it down even more. So we're somewhere comfortable knowing that you're going to give up on the upside, the return side, and that's okay. You get to a point in your life where the rate of return doesn't matter as much as the asset protection, right? But how do you reconcile that? And how do you get the balance where it fits for you and your family and all that?
I get rid of 2 horses. That's what I do.
How many do you have? Did you bring them down there?
2.
You still? Okay.
They're bankrupting me. You need to take them.
I don't think they'll work here in suburbia, but I'll check. Well, just the hay costs, I can't imagine. What is it now? It's gonna be crazy.
Oh, I don't know, but they're boarded. That's the problem. So,
Yeah.
So
I do know a vet who's building a facility, and he's from up here. He's building a training and vet hospital right there in Scottsdale.
oh yeah.
I'll have to. I started to mention Kit.
If you want 2 free horses.
Yeah, I don't know. I know they train horses and they do all sorts of things, and they own a bunch of horses. I started to talk about Kit, and then I realized I don't even know. I don't know who she works with, and so I had to bow out. I'm like, he's like English, Western. What does she? I'm like, I don't really know.
She's doing reining training.
Reining training. Okay.
Yes.
Yeah.
Quarter horses.
Yeah.
And
Okay.
this great big stable. Works
Yeah.
12 hours a day, 5.5 days a week.
Ooh, it's a lot of hours.
Never see her.
Was she still thinking of a career choice or change, or is she sticking with it?
Well, it's sort of evolving. Some interesting things of where she's at right now is that she's just had some opportunities that kind of, I think, it would still be in the horse world, but sort of she's learning a lot about breeding and farm management and things like that. So I'm not sure. And they like her where she's working. So I don't know what that'll mean or not. Not moving toward anything else. That's all I can say right now.
Yeah. A holding pattern of sorts.
Yes. Yep. So that's the deal with that.
Okay. Well, we'll talk more.
Okay. Well, I look forward to seeing you when you're down here.
Yeah, I'll try to maybe contact you this weekend or something, give you my firm dates.
Yeah.
You're what, maybe 40 minutes, half an hour from there, you think?
From Kierland,
Yeah.
I am about 35 minutes. 30
Oh,
minutes. That's
okay.
one of my favorite places right now. That's where I like to shop.
Oh, really?
Yeah, it's a
Okay.
cool little shopping area.
I don't know that I remembered if it was there when I was there or.
Really new. I bet it wasn't
Uh-huh.
because it's north. It's very north. It's not that far south of the 101 in the north of
Yeah.
Scottsdale. And you're only about 10 minutes from Kit.
Yeah, I'm looking it up. It's the Westin Kierland Resort and Spa. Yeah.
Yeah, it's kind of a upscale little shopping area, hotels.
I think some of it may have been there. It might have been right at the kind of the infancy of it when I left.
Yeah, it's right on Scottsdale Road.
Okay. Well, I'd be great to see Kit too. If you maybe you guys could come
If
over
she
and
gets
see
off
me.
work.
What's that?
If she ever gets off work.
Right. I don't know that I'll have a car yet, but we'll figure it out.
Yeah.
Well, I probably need one. I'll be flying into not DIA, Sky Harbor.
Yeah.
It's kind of short notice. I'm still working out the details.
Yeah.
Yeah. Let's touch space soon and we'll firm that up. It'd be great to see you guys.
Okay. Best to your family, Jessica, Garrett.
It's his birthday, so I'm gonna go help cook lasagna, his favorite meal.
Well, say happy birthday to him.
I will. I will.
Okay.
But before I sign off, I don't know if I addressed all your concerns we'll talk more about, but was there anything else top of mind that you had?
No, I think that's pretty good for now.
Okay.
Yeah.
All right.
All right.
I guess that's it, everybody. Anybody else have any questions before we sign out? Rod, you're in twice, so hopefully there he is.
I'm here.
Okay, you're still there. I thought maybe you would have left. You almost to Denver?
We're in the 2 lane still.
Oh, okay. Okay. Did you have any questions or thoughts before I sign off?
No, I think I'm good. Thank you.
Okay, we'll talk soon.
Yeah.
This is somewhat of a fragmented presentation. This is what happens when nobody really shows up. I just talk. So I hope somebody gets something out of it. We'll be here next month for the same format. And as I mentioned, we'll have a webinar that's more content driven also coming up that will be consistent with our tax planning theme. Other than that, send us emails, give us a call if you need anything, and then also sign up for our mid-year review so that we can meet one-on-one and go over your accounts and all that sort of thing. So that is all. Take care, everybody. Have a great night, and we will talk to you soon.
Okay. Bye.
Thank
Bye.
you. Bye.
Bye, Rod. See you, Frank. See you, Tracy. Bye-bye.